While most investors are sitting on the sidelines waiting for signs of a REIT recovery, these three Singapore REITs have already turned the corner and are quietly leading the pack. They've been trending higher for months now, showing strong price action and bullish momentum on my One Good Trend Pro indicator. And with more interest rate cuts expected in 2026, the setup could get even more explosive. In this video, I'll break down why I believe these REITs are just getting started and how to position yourselves before the crowd wakes up. Let's dive into that. So the very first REIT for today will be that of Starhill Global REIT. The code is P40U, right? And Starhill Global REIT is one of those REITs that owns properties in Asia Pacific, even in Singapore as well. They own malls like Wisma Atrio and even Ngee City, whereby, some of you might be renting, many of you might have shopped in these malls as well. So let's take a look at the chart right now for Starhill Global REIT as to why I like this stock since a couple of months back, and does it still look bullish, right? So you can clearly see that for Starhill Global REIT, well, we have been in a pretty good uptrend since the beginning of the year, just by looking at what we call higher lows, right? So since August last year, you can see that the lows actually kind of got higher and higher. So in an uptrend, we are looking at, whereby prices are going higher and consolidating, forming higher lows. That's where we're going to think about getting in on stocks like this, which are strong, right? And for Starhill Global REIT, the longer term trend has already been up since last year. And just by looking at the 100 days moving average, the red line, and the 200 days moving average, the blue line, you see that both of them are still pointing up. So the long term trend is intact, is up. Along the way, we might see some short term consolidation and it pushing higher and attempting to find a new high. Now let's take a look at the short-term trend, and we can take a look at what we call the green 20 days moving average line. So since, like, I would say around June and July, right, the short-term trend, if you see, was pretty much sideways, right? The green line was just going sideways. So it was a bit of a sideways trend from January 2025 all the way to June 2025. But around July, you can see, right, we kind of like broke above this 50 cents. 50 cents was a psychological resistance level that we've been trading below. But when we broke above it, that was when the green 20 days moving average line also started to turn up. Does it make sense? Well, all right, and all we go all the way up. It's kind of like, sloping sideways a little bit, maybe a little bit up right now, but it still looks quite okay because the longer term trend is up. So it might be taking a little bit of a breather, right, moving sideways in the short term as it consolidates, gathering more strength for the next upwards move. So what could be kind of like the support level that we're looking at right now? Well, I would say that right now, we are seeing a bit of support right over here from like 0.55, maybe about 55 cents, all the way to maybe that 59 cents. You can see, right, that was what has happened over the past month over month. It is up and down, consolidating sideways in the short term, while the longer term trend still looks good. Let's take a look at what it says on the One Good Trend Pro indicator. So based on this One Good Trend strategy that I've been using for more than 15 years now, well, we have this indicator right up here, whereby in a matter of seconds, we can turn on the very first box that gives us the bullish and bearish signals on any stocks, any asset classes, right? So it just give us an idea of, is this stock looking bullish? Are we seeing signs of weakness because of a bearish signals coming out instead, right? So let's find out. Let's turn it on. And there we go. As you can see, right, for Starhill Global REIT, well, we had a couple of bullish signals coming out since March, bearish signals in April when Trump introduced tariffs, right? Came down sideways a little bit. But look at this, right? I think the most recent bullish signal that led the reversal was somewhere over here in 9th of June, right? 9th of June. And it was where, we were actually still trading below that 50 cents psychological resistance level, right? Remember, right? We got a bullish signal, was trading below, and finally we broke the 50 cents, and there we go, right? All the way up, and from 50 cents now it's about 58, 59 cents right over here. So I think not too bad. These bullish signals is still in play. This stock has already turned into an uptrend since June and July, with this 1GT bullish signal still playing out. So what we can do is to turn on what we call the trailing support level to get another confirmation if this stock is still bullish. So you can see right over here, when we got the bullish signal coming out, then now we have the trailing support popping out. So this is a trailing support that follows a stock as it moves up. It gives it the breathing space, the room to move freely as well, and it accounts for the volatility as well. So as long as we are above the trailing support level, well, it is still good, right? You can continue riding the uptrend as just an additional confirmation. Does it make sense so far? All right. And of course, right now you can see that we are definitely still above this trailing support that is somewhere around that 56 cents level. So in fact, if it does dip to near that trailing support level, that could be good grounds whereby one could accumulate on dips for a potential reversal to potentially test, all right, and break the 59 cents or maybe even the 60 cents psychological resistance level. We do break this resistance while we may even see the new 1 GT bullish signal being triggered, and that could lead the next upcycle of targets, right, whereby targets could be revised maybe all the way to 65 or to even 70 cents. All right, so this is Starhill Global REIT, one of the REITs that have came in my watch list over the past few months. Has been looking strong, still holding above the horizontal support, even the trailing support, and there could still be more upside. But let's see when the resistance actually gives way. Okay, let's move on to the second Singapore REIT today, and that would be Keppel REIT, right? The code is K71U. And Keppel REIT owns what we call some of the best, I would say, premium grade A properties in Singapore. Some of you maybe even be working in these properties like, Marina Bay Financial Centre, ORQ, One Raffles Quay as well, right? These are premium grade A office assets in Singapore, and they do own some other assets in Australia as well as in South Korea as well. Now let's take a look at the charts of Keppel REIT. So you can see for Keppel REIT, right, well, it's been in a very strong uptrend even earlier, maybe somewhere in May. And I talked about it in my previous YouTube video as well, right? We got a 1GT bullish signal coming out on the 2nd of May. There were some signs of the trend turning up as well in terms of the short term. Look at the green light, started to turn up, flat, up. Is it still up? Yeah, it is still pointing up, right? So it looks pretty good. Short term trend is still up. Longer term trend, look at the red and blue line. It has been in a longer term uptrend, I would say officially since July, when we see the crossover of the 100 days moving average above the 200 days moving average. So all the signs are aligned, right? Whereby, we long-term trend is up, the short-term trend is up, we got the bullish signals, and that's where this stock has started to push up, I would say, from the very first bullish signal all the way to now, about a 31% in about 6-7 months. Not too bad, right? Not too bad, 31%, but there could still be more legs to this rally as long as we hold above certain support levels. And this is one of those REITs that have been quietly leading the pack, right? Moving higher and higher while most of other REITs are still going down or just going sideways or don't know what they're doing, right? But these REITs has been pushing gradually higher, consolidating, trying to find a new high. And we definitely want to ride on stocks like this, on REITs like this that has already proven themselves in an uptrend and can continue maybe pushing even higher. Let's turn on the trailing support for Keppel REIT and see what it says, right? Are we above the trailing support? Definitely, right? You can see since May, the trailing support has popped up. It followed Keppel REIT as it moved up, right? As it moves up, it followed it, but it doesn't follow too closely. It give it the breathing space to move on. Or any dips to near the trailing support, you see, that's where we started to see a rebound. Same thing over here. We neared it. It could be grounds of bargain hunting coming back, and we push away from it. So as long as we near the trailing support and all the other trend indicators look bullish, well, that could be where one could think about a potential entry, right, to ride even more upside. So I think right now, trailing support level will be somewhere around the $1 level, $1, 101. If we stay above those support levels, I think it still looks good. Maybe all the way to $1.10. I think 110 may be a bit of a psychological resistance level. Maybe you might see a bit of profit taking near there as well. But if that gives way, I think target could be revised all the way to $1.20 as well. So this is Keppel REIT, right? One of the REITs that's been in a pretty strong uptrend. Looks good still. No signs of weakness, no bearish signals coming out yet. If it does come out and we see signs of the trend turning down, yes, you might want to get out, take some profit, all right, and reduce your exposure. But as of now, still looks good. Why not ride even further? Make sense? So let's move on to the third Singapore REIT. And before I talk about this, right, if you want to get some of those top Singapore ideas daily by WhatsApp for free, not just the REITs, but any Singapore stocks, right? Could be the banks, could be any other small to mid caps. Well, find out, all right, how you can become a client of mine in Philips Securities for free at no additional cost, right? The link is right below the video. Click on it, especially if you're kind of like trading, you have a trading account, but you just log in online to a mobile app or the website and you don't get much service from your own broker, right? Nobody send you any ideas or videos or trainings or WhatsApp you and stuff, right? Check it out. The link's right below. Find out as to how you can get some of those private trainings from me directly and some of our ideas by WhatsApp on a daily basis, right? No additional cost. Check out what our clients are saying as well. Link below the video. Now, let's move on to Suntec REIT, the third Singapore REIT that I'd like to share with you guys today. And this is it right over here, right? The code is T82 yield, right? So Suntec REIT is a commercial REIT, right? It owns properties like, Suntec City Mall, Suntec Office Tower, the Convention Center in Suntec area as well. It also owns Grade A offices, right, in Australia as well as in the UK as well. And I would say it's one of the most actively traded REIT in the Singapore exchange, right, compared to the other two REITs as well. So this is Suntec REIT, right over here at about $1.35. So if you ask me somewhere in like May and June, I would say that this REIT was pretty much quite boring, right? It was moving sideways. We were capped below like the 120 to 115. We see, look at this right over here. We touched, we came down, and we got a couple of bearish signals actually since last year, whereby we were below 120, we got a bearish signal, and it started to trade even lower. However, somewhere around July, right over here, you can see, right, that was where we got the first 1 GT bullish signal coming out. And after that, we got some signs of the trend also turning back up in terms of the moving averages. Look at the green line. It was like going flat, right, for like 1, 2, 3 months. Somewhere in July, August, there we go. The bullish signal appeared. We got another confirmation in terms of the short-term trend turning up. Right over here, up, and we started to see that reversal happen. Of course, same thing, the longer-term trend, red and the blue line, red went above the blue, it's a bullish crossover. Both of these red and blue lines started to turn up as just another confirmation that the longer-term trend has started to take shape as well. So let's see where we are right now and what will be the new support levels. Well, I would say that right now, we are seeing a little bit of a higher support level right over here, maybe around the $1.25. Look at this, right? Over the past 1-2 months, well, it seems like every time we near the 125, rebound, all right, and we're still above 125, maybe even 130, all right, we could see a new support level as well over the past 2 weeks, all right, so it looks pretty good. And in fact, I think we got another new 1 GT bullish signal actually coming out as well, somewhere over here on the 22nd of October, just about 2-3 weeks back. So not too bad, right? That's where it started to push a little bit higher, right? And there are obviously no 1 GT bearish signals out yet. Let's take a look at the what it says on the trailing support level. So let's turn it on. So this is one of the very powerful feature of my One Good Trend Pro indicator, whereby let's turn it on and we get that additional confirmation whereby are we above that trailing support level, right? Are we near it? Are we far away from it? Or is the trailing support following it as it moves up? Because if it stays flat, that means it's not really moving up, right? So it's nothing to follow, right? So if it stays flat for a while, then maybe not as powerful as if it continue to follow a stock in an uptrend, right? So let's take a look at what it says, right? You can see that the trailing support has popped up somewhere in July, right? As another confirmation. And we have Suntec REIT moving up. And there we go, right? The trailing support, follow it up, flat, follow. And we are right over here at about that $1.29. So let's just say maybe about 130. I think that would be very near. 130 is the horizontal support, also where the trailing support is near as well. So I think as long as you stay above that 130, not too bad. The uptrend remains intact, right? And we can break maybe like the 138, right? 1.38 is a little bit of a resistance you've seen over the past 2 weeks. Well, if we break the 138 to maybe 140, I think that's where targets could be revised even higher, all the way to that $1.50 psychological resistance level, right? So that's where you can see targets from here being raised all the way up, maybe to that 150. So this is Suntec REIT, the third Singapore REIT that I shared with you guys today, whereby it looks pretty good over the past few months. No signs of weakness, no bearish signals out. So why not ride even further until we see that bearish signal or maybe confirmations that it is starting to retrace down. If not, let's continue to maximize our profits along with the uptrend. So there we have it, guys. These are the 3 Singapore REITs that I shared with you guys today, and that will be Starhill Global REIT, Keppel REIT, and Suntec REIT. I hope you have a better idea on these 3 REITs. Put in your watch list for potentially more upside. And as I say, right, if you want to get some of those ideas, Singapore updates, Singapore stock, by WhatsApp daily for free, click on the link below the video to find out how you can become a VIP client of mine in Philip Securities, whereby you get some of those ideas by WhatsApp daily for free at no additional cost. And check out what my clients are saying as well. I look forward to see you on the other side. And of course, make sure you subscribe to the YouTube channel if you're not yet done so that you will not miss out on any videos like this. Joey here. Thank you so much for watching. I'll see you in the next video. Take care.